Morning, everyone, and welcome to Trading Binary Options Using Support and Resistance. My name is Gail Mercer, and I will be your host for today. Now, before we get started, I do want everyone to take just a moment and read over the Nadex risk disclaimer. Trading is risky. Every time you go into a trade, you're paying a risk, and you could potentially lose that money. So you should never trade with money that you cannot afford to lose. Now, I'd like you to take just a few minutes to go over the risk disclaimer. This covers you as well as us, okay? And then we are going to get started this morning. Now, for those of you that do not know me, my name is Gail Mercer, and I've got over 15 years of trading experience. I started out with a company that programmed indicators, and I absolutely fell in love with the price bars. I thought that was the coolest thing I had ever seen. I specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf Magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, as well as the New Trader's Guide to Trading Nadex Binary Options and Spreads. Now, today's discussion is going to focus on support and resistance for trading binary options. And that means you need to understand what pivot highs are and pivot lows, and how a trade typically plays out. Good morning, Rick. Now, how do markets move? Markets always move off of support and resistance. I realize some of you may be familiar with Elliott wave. You may be familiar with wolf waves. You could be familiar with the zigzag like I have plotted on the screen now. But the one thing that you will notice is that it always plots on a high or a low. And that's because the highs always will form resistance, the lows will always form support. Anytime you have a support area, it typically means that price has rejected that area and it's going to move up off of that area. What levels are support, or what areas offer support? Any low can be an area that will support price. When price breaks through a prior level of support, typically it will also go back and retest it to make sure that it forms resistance. And you will see this on any market in any time frame. Does not matter. Resistance forms when price cannot break through a prior high. Any prior high, no matter how insignificant it looks, can stop price, okay? If price breaks through the resistance area, it can then go back and test to ensure that the area will act as resistance, okay? Now, this is an example, and you can see that the high was formed over here. And all I did was draw a straight line off of that high. You see that they tried to test it here, and then they went down to try to test the low, which is the yellow line. They failed to test the high, it moves down to test the low, fails to test the low, goes back to test the high. The same line is tested not once but twice. Again, it fails, it goes back down to the yellow line, goes back to test the red line, and then it breaks the yellow line. But remember, every time it breaks through an area of support, it's going to go back and it's going to retest it to ensure that it's actually going to prevent price from rising. That's exactly what happened here, okay? And this is, you know, if you have one way to say that the market moves, this is the way the market moves. You can see they went back to test it right here. Then they break through the next yellow line. What happens? They go back to test it and a new lower high is formed. They break through the next one and it comes down, forms a reversal bar, goes back, forms another reversal bar to the downside, and of course it breaks through the line of support. This is why we say that the market moves in waves. You get an up move, retracement, up move, retracement, up move, retracement, and then you get the opposite. You get a down move, a retracement, a down move, and a retracement. Each one of these will come off of a high, and each of the lows will come off of a low. Okay? And this is why, if you can understand this concept, you can pretty much trade any market that you want. Okay? Now, what do you have to know to trade this? You have to know your price bars. You know, price bars is the most important thing on your chart. I don't care about any other indicator. The price bar is the most important. I often tell my traders, when I'm trading, the price bar is just my higher power, okay? A green candlestick formation in the Nadex chart is a bullish formation, okay? I did not draw the wicks on here. I simply drew the body of the candle. The bullish candle always opens at the bottom and it closes at the top, okay, of the body, okay? A bearish candlestick will always open at the top of the body and close at the bottom of the body or anywhere in between there. But the significance of this is very simple. If you're looking at the bullish candlestick, the close will always be greater than the open. On a bearish candlestick, the close will always be less than the open, okay? This is what makes it bearish. This is what makes it bullish, okay? All right, now, this is a 2-bar reversal up. What does that mean? It means that on this second bar, in this example, that second bar has made a low, as this is lower than the previous bar, but it closed right up at the top. That tells me that the next bar is going to go up. This one, on the other hand, you can see that this low is lower than this bar, and it also closed in the upper percentile, okay? Some people will call this a pin bar, okay? It doesn't matter whether you know the names or not. It matters whether you know the formations, okay? All right, a 3-bar reversal, and these are also called pivot bars. And the reason that they're called pivot bars is because they pivot price into the opposite direction. In this case, you have bar 2, which is a center bar, forms a low because it is lower than bar 1 and bar 3, and bar 3 closes above the high of this bar. This is a strong pivot bar to the upside. In other words, the next bar should be up. Now, this next formation is almost the same, except the third bar does not close very strong to the upside. Still says the same thing. The next bar should be an up bar. Now, you also have a 2-bar reversal to the downside. In this case, this bar made a low, closed up at the top. This bar projected that the next bar more than likely would be an up bar, or make a high, I should say. And what happens? It makes a high, but as that high was made, it then pushes it back and it closes on the low. More likely than not, the next bar will be a down bar. Now, we don't always get perfect price bars in these formations. So, for example, on this one, you know, it pushed up and then it came back down, It doesn't look exactly like this one, but the significance is the same. The next bar should be down. A 3-bar reversal to the downside is when the middle bar makes a high and then the next bar closes below the low of the middle bar. This is a pivot formation to the downside. More than likely, the next bar will be down. Now, you can see that here you have a stronger formation as it closes significantly below the low of the middle bar. And then you have a very weak pivot bar. All three of those can push price down. Now, we also have what's called engulfing bars. And what is significant about engulfing bars is that both the high and the low of the previous bar is exceeded. In this case, the next bar should make a low. In this case, the next bar should make a high. In other words, you have a bar that actually encompasses the prior bar, but it closes on the low, okay? Also closes below the low of this previous bar. Do y'all see that? Now this would be bearish, telling me that the next bar will be lower, okay? And more than likely it's going to be red, okay? So it's going to be filled in with a red color. In this case, the next bar is probably going to be bullish, and it is going to be a green bar, okay? This very predictive in and of itself, okay? Now the doji bars, and we don't always get the perfect doji. The perfect doji is actually when it looks like this. Okay, that's a perfect doji. If this was a high or if it was a low, this would be a great doji. But sometimes we have it like this, where there's just a one tick move here between the open and the close, or here, okay? The significance is that it has to be a high or it has to be a low. In other words, if it happened right here in the middle of this bar, I wouldn't pay attention to it. It has to form a low or it has to form a high. Does it have to be that the body engulfs the whole candle? Typically, yes, Tom. That's what you want to see. And sometimes on those bars, we have what's called twins. And I'm going to go back to that just a moment. And what you might see on this is literally they're twins. It's an up bar. So I'm just going to mark that as a up bar. And then you'll have another one. It's literally a twin to it that is a down bar. Okay. This can be the same significance as what this one is. This one is stronger, but this one can also work for you. Does that answer your question, Tom? Any questions on price bars? Because, you know, if you don't understand the price bars, you're not going to understand the support and resistance, because the support and resistance are formed on these bars. Okay, let's go to the next one. Now, this is an entry on the USD JPY. The blue lines on this chart represent highs, and they were always made in the past, okay? So we had a high here, a high here, here's a high, here's another one. All of these blue lines are highs. All of the red lines are actually lows. And I actually recommend that when you're watching your chart, when you're practicing, that you're actually drawing these lines off of this chart. Now, the one thing that you should notice, because I'm going to move over here to the right side of the screen, which is where price is forming, is that this candlestick formation right here is the reversal bar pattern, but you also get another reversal bar here, okay? This trade was entered. It had 27.25 in risk, okay? Does everybody understand that? You've had two reversal bars on this saying this is probably going to go up, okay? Now, this is your 60-minute chart. You can also see on the 60-minute chart, this was your low. It came back to test the low, and it formed a reversal bar. Again, this is one of the reversal bars. It's not perfect, okay? But what does the bar tell you in itself? The bar tells you that price opened, it went down and made a low, and they rejected that low. In other words, this low is going to act as support because price pushed back up and closed probably one tick from where it opened. Does everybody see that? Then they formed a high. They broke through the high. They're going to come back and they're going to test to see where is price going to support an up move. You form a doji here. They come back to test it over here, forms a reversal bar. More than likely, price is going to go up off of this. Everybody understands so far? And if you're looking at these, look how the reversal bars, do you see how this bar went up? It formed that high that tested the previous high. It's a rejection. Why is it a rejection? Because it closed in the lower percentile. They come back over here. They form a reversal bar to the upside. They reject the high here. Okay? To the last slide. This one, Sonny? Okay, what's your question? The reversal bars? Okay, here, now this is what you have to picture. Price opened here. It pushed down, okay? And then they pushed it right back up, okay? This is a reversal bar, okay? This next one even confirmed it further because it closed up here, which is greater than the high of this bar, okay? So this one could actually be either the 2-bar reversal or it could be the 3-bar reversal. Here, price goes up, breaks through this red line, forms a high, but then closes in the lower percentile. Do you see that? Also significant that it closed below that red line. That's a rejection of that area, okay? Then they go and they make a new high here. Now, when they make that high, do you see how it's lower than the previous high? The next bar makes it a 3-bar reversal because they closed below the low of that bar. Do you see that, Sonny? So then price moves down, which is anticipated. Then it moves down again. And do you see how they came back to test this low right here? And as they came back to test it, do you see how they pushed it back up and it closed here? That makes it a reversal bar. It closed above the high of this bar. We then get an inside bar. We get another bar that is testing the high over here, but it is a bullish bar, okay? So that tells me that more than likely we're going to have another bullish bar. Do you see that? Any other questions about this chart? Okay, so now we went through the 60-minute. Now let's go to the second bar after entry. Now, what happened on this bar that said, hey, this trade might be in trouble? Does anybody see it? And this highlights exactly what I said. Do you see this high over here? They're coming back to test it, but then it pushes down, correct? That is your first clue that your trade might be in trouble. Why? Because they pushed price up. They tried to test this previous high, okay? They pushed it up, but then they closed back down here. Now, the only thing is, the only hope that you have in this trade is the fact that this price bar closed above this high. So they may test it again. Everybody understand that? So now this is the third bar of your trade. You have 60 minutes remaining in this trade, okay? They're trying to push through this high. This is the fourth bar. Would you stay with this trade? You got 45 minutes. This is a 15-minute chart. Will you stay? Or would you exit? Okay, some of you would stay, some of you would close. Okay? Now you have 30 minutes remaining. You're down $3.50. Would you stay or would you close? Some would stay, some would close. This is expiration. What is your job as a trader? Your job as a trader is to take profits, okay? Whenever they're offered, you cannot go wrong taking profits. This is the bar that said more than likely it would go down. Why? Because it forms a 3-bar reversal. That told you that a pivot high has been put in, okay? Why did you not take the profits that were offered? And this is an issue that all traders have, okay? Your risk on entry was $27.25. Price went up and offered you $33 and you didn't take it. You wanted more. Even though you knew this was an area of resistance. The price forms a reversal bar. You still have $11.50 in profits, but you don't take the profits because you're hoping it will go back up. Price goes down and breaks this support line. You're down $3.50, but you're still holding, hoping it will pop back up. Price expires less than your strike. Not only did you lose the $27.25 in risk, but you also lost the $33 or the $11.50 that it was trying to offer you in profits. Why? Because you wanted more and you were hoping it would give it to you. That is not your job as a trader. Your job as a trader is to take profits. And it's really pretty simple when you're trading binary options. And the reason is there's always another trade that comes in. Always. Okay? Here you have the pivot low that will push price back up. Okay? Because how would you have known to exit the trade at $33? Because you're at a level of resistance. From all the way over here, you saw that that was an area that was going to resist price. You knew that. And when you're coming into an area that is going to resist price, price needs to do one thing. It needs to blow through it like it did over here, or take your profits. Does that clarify it for you? You know, if it blows through the resistance area like this one did, then more than likely you're going to get your profit target. But if it hesitates, and I mean, you can clearly see that it did hesitate here, okay? By the end of this bar, I think you still had like 1150, okay? You could have taken something instead of waiting, okay? Now, this one, again, this closes above the high of that bar, okay? And this blue line here represents where my entry was, okay? So you had probably 2 minutes left before that bar completed, okay? Well, actually, you had 3 minutes, okay? Because my trade time was 8:27, okay? It's not an engulfing, okay? It's not an engulfing because this is the high and this is the low, okay? So it did not engulf it because it did not totally engulf that bar, okay? But it is a pivot low. A pivot low will do what? It will push price up. You're long. You want it to push price up, okay? And what happens? It does push price up. Now, in this case, you have moved one strike above where your strike is. Is there any weakness in this bar with 5 minutes left? There's no weakness in that candle. None. It's not down here at the bottom, okay? This is one that only has 5 minutes. Now, what is the significance of having that 5 minutes? Does anybody know? This is 5 minutes until expiration. More likely than not, this bar will continue to be above your strike. You're going to get the maximum profit or the maximum payout, which is $100 on this one. Now, the next one may form the reversal bar, okay? But chances are this one is not going to form your reversal bar. It's not going to be a pivot high that pushes the price down. It has no formation of it. Do y'all understand that? Oh, it's okay. That's why we have this presentation, so you can ask questions. I love questions, Sonny. All right, let's go back to the pivot formations. Okay, we're looking for a 2-bar reversal down or a 3-bar reversal down. Okay, Sonny? Does it look like this? No. Does it look like this? No. Okay, let's go to the other ones. Does it look like this formation? Does it look like this formation or this formation? See, this would take a 3rd bar. That's a 15-minute chart. It takes a third bar. This takes a third bar. This takes a third bar. I only have 5 minutes until expiration. That means the next bar might go against me, but I'm already expired in the money. Now, do you understand, Sonny? Does that clarify it for you? What chart should we be using? 15 or 60 minute? It doesn't matter. It just depends on what type of binary that you're out on. This is where it expired in the money. So you did make full profit potential on that one. Do y'all understand that? And we'll go and we'll look at different charts, Tom, so that you can see it doesn't matter. What matters is which binary option you choose. You know, if you're trading a 60-minute, I wouldn't be trading a 2-hour binary. If I'm trading a 15-minute, generally I'm trading a 2-hour binary. Now, do y'all see how, you know, that bar had no weakness on it? You could pretty much already predict that this was going to expire in the money because it really didn't have a chance to form your reversal bar. It doesn't have a chance to form the pivot bar. It needs the pivot bar to push it down. Does everybody understand that? Okay, before we go and look at any charts, I want to sum up the differences between the two trades. The first trade, the price bar showed you weakness at an area of resistance. That told you it needed to test for support. Trade number 2, you entered following the test for support, and there was no weakness on the price bars prior to expiration. Now, you need to try to time your entry with a test of support or resistance combined with the power of the price bars. When weakness is shown in a price bar, take your profits early. If there's no weakness in the price bars, you may want to consider holding until expiration. But again, it depends on how much time you have until expiration, whether you want to hold or not. You know, if I can say, okay, there's no weakness here, and I've got 5 minutes left or 10 minutes left or whatever my price bar is, then typically I'm going to hold. But if you've got 45 minutes, you might want to consider exiting early, okay? Now, you can visit my website at tradershelpdesk.com, and you can also email me at gm@tradershelpdesk.com. I do try to answer all of my emails within, you know, within the day, actually. If I'm on vacation, it might be 24 hours. So let's go over and let's look at some charts. And okay, does everybody see my Nadex window? If it leaves a wick, we refer to them as pivot bars. Not necessarily, because most of your candlesticks are going to be wicks. They're going to have wicks on them. It is dependent on whether the wick creates a high or a low and where the close of the price bar is. Okay? Any particular market that y'all want to look at? I mean, I can look at forex all day long. I love forex. I love futures. Y'all give me a market. GBP US dollar, okay? And I'm not trying to enter a trade on this. We are trying to focus on reading support resistance with price bars, okay? So we're going to choose the 1 p.m. We'll look at the Wall Street 30. The GBP New Zealand is not offered via Nadex. Okay, so this is the British pound US dollar. This is a 3-minute, which is a little bit too fast. So let's change this to 15-minute. All right, now the first thing I would notice on this chart is this is the immediate high. Now I'm also looking for another high. Here's another high. Here's a high. Here's a high. Here's a high. Here's another high. And where are our lows? We also have another high here. This is a pivot bar that's going to create a push down on the market. We have a low here. We have a low here. We have a low here. Another one here. This is where it tested the previous low. We have a line of lows here, a line of highs here, a line of highs here, and we have a low here. Now, where would you think that price will go? Just based off of this, where do you think price will go? Notice that it's already tried to test that high and it failed, okay? So where would you think that price would go? Right. I would expect price to go down. And the only area that I see that could potentially test is right in here. Do y'all see that? You do have over here, you have a high right at this strike. So that's the one you would have to watch out for. I don't see any other ones though. Just looking at this chart. This is the only area, this one, and this area right here that I see that will, what? Potentially support price. That's where you're going to have to watch. Any questions on that? All right, let's bring up another chart that people wanted to look at. Crude oil. Okay, let's go look at crude. It blew through everything this morning. Let's do 11 to 1. All right. Let's get our pen out. Here's a high, high. That was a low at first. What formed at the top of that market? Just saying. Read your price bars. Now, you went down, went back and tested the high here, came down again, went back and tested it again, came down, tested where it had broken through, went down, went back to test the low that was previously tested, and then fell off of the crude oil inventories. Do you see the zigzag pattern? And you will notice just about on every one of these, it's a reversal bar. Any questions on this chart? Now, what's happening right now on what I call the live edge of the market? You just formed a reversal bar here. They're trying to test it on this bar. If this bar continues, more than likely, you're going to see a retracement in crude. Now, this bar, which was created from the market report, is considered a wide bar, okay? Typically, price will retrace about 50% of that wide bar. Do you see that? It's just typically what happens. Do you see this bar over here? These wide bars will stand out at you. A 50% retracement would be about here. I didn't do a very good job of that one. Do you see how it gave you that retracement? This is typical price behavior. You know, it's just the way price works. And once you learn that, you've learned the secret of trading, really. Do you see how it went back and tested that high here? Now, how far back do you need to look? That's a big question that everybody asks. You know, typically I'm looking at, you know, maybe yesterday and maybe today's action, unless like on crude, do you see how it made this new low here? That's when I would probably scroll back and try to find more data. And this is when you could potentially bring up, for example, a 60-minute and say, okay, is there another low in the vicinity that I can look at? Do y'all understand that? So for example, on this one, is there another low back here? Well, no, I need to load more data to see it. Okay. And I mean, even looking at this chart, this is a Ninja Trader. Okay. What is the first thing that should have stood out at you on crude? On the 60-minute, do you see that rejection? And that was a strong rejection. Okay. They came back to test it here. Again, you formed the 3-bar reversal. Here, they formed it to the upside and it didn't go anywhere. Do y'all see that? So this is the one price pattern it didn't play out. That should include you in, oh, something's wrong here. Okay, what was another one y'all wanted to look at? Let's see. The Wall Street 30. All right, let's go look at the Wall Street 30. Let's get rid of this one. Okay, you had all of these highs in here. Okay, you also had a high here. You had some highs here, some highs here. You had a low here. You've had lows from over here, had lows from over here, and they've pretty much bounced off of that low. Made a high here, reversal bar to the downside. This is what's going to push it down. The key is going to be whether it can break through this area right now. This is a very weak bar as it stands right now, so I would think they're going to break through and potentially go lower. You do have some lows over here you need to be aware of. But this particular bar right here says you're probably going to see another push down. Euro dollar. Does anybody have questions on the Dow? The euro dollar. Okay, let's go look at the euro dollar. I generally will look at a higher time frame. How would you choose which strike rate to go for? I think it depends on your risk tolerance. I don't really recommend any trades. You know, I use out of the money because I like low risk. You know, you might prefer the at the money or, you know, in the money. That's a personal preference. Let's see. Let's look at the euro dollar real quick, guys. I'll get distracted here. All right, these are your twin bars. There's your twin bars right there. Somebody was asking me about the twin bars. This is it right there. Straight up, straight back down. That told you that this was going to go down, okay? Now, let's start drawing off the highs. And there was a total rejection of this previous high. They've rejected it twice, okay? Now they're kind of hesitating right here at this low. They formed one reversal bar that did not play out. Usually that's indicative that it's going to go down again. This is a high here. They blew through that one. You've got a low here and a low here and a high here. Now, do you see how this high formed over here, but they came back to test it over here? This is usually what you want to look for, okay? You have twins right here. You have a twin up, twin down, twin back up, okay? Great price bars to look for. It has it right here in this one as well. They came back to test that one. That's what's called pretty much a double bottom. They rejected it over here. Now, would this be better if you were going into a 60-minute reversal pattern? Oh, yeah. It would be. See if I can bring up 60. So do you see how they had this 60-bar reversal pattern right here? You know, do you see the move off of that? You know, that's a good move on a 2-hour binary, okay? A really good move. And you knew it pretty much at the close of this bar. Would I wait until this one formed? No, because this one qualifies as the 2-bar reversal. They push price all the way up and then they're going to take it back down. Is there a webinar on how to read the info on the right-hand side of the charts and how to draw support and how to use the charts in general? I do have a lot of webinars available in the archive, Tom. I did do one there on pivoting into profits last year. You might want to go back and look at it. But yeah, there's a lot of information on how to read charts that I've done, I know. Would we enter the trade at the close of the third bar confirming a pivot? It depends on whether it's a 2-bar reversal or whether it's a 3-bar reversal. You know, bars like this right here, I'm entering at the close of that bar usually, and this acts as my confirmation on whether I want to stay with the trade or not. You know, here I'm entering off of that bar, wanting this bar to develop, okay? Whereas in this one, I'm going to wait because that's not a very strong bar. So it really kind of depends on what your risk tolerance is in whether you're using at the money, out of the money, or in the money. Okay, any other questions today? You know, the big thing, and I do have like a cheat sheet that if you email me, I send you the cheat sheet, and it actually has the price bar formations on it. And what I suggest, if you don't know your price bars, print them out. You know, stick them on the bottom of your monitor and say, okay, these are the price bars I'm looking for. My email is gm@tradershelpdesk.com. Hold on just a moment and I'll type it up. Do I recommend doing 5-minute binaries? No, I don't do them. I'm not going to recommend you do something I won't do myself. So I do 20 minutes, but I don't mess with the 5 minutes. Oh, well, thank you, Sharon. You know, the cheat sheets is what I call them. So if you email me, please ask for the cheat sheets, because otherwise I won't know what you're talking about. But I mean, it's just, this is what it is. It's just printed up, and it gives you a very quick reference. Okay, this means more than likely it's going to go down. This means more than likely it's going to go up. There we go. So you've got down, up, up, down, and then the second portion of that one would be this one. Oop. This generally means it's probably going to go down, probably going to go up, probably going to go up, probably going to come down. Okay. And I mean, price bars are leading. They do tell you, you know, just like this one. Does it always work 100% of the time? Nothing does. You know, it's not the Holy Grail. There's not a Holy Grail. But this price bar gave you warning that more likely than not, the next bar would be down. Okay. More than likely, the next bar would be down. More than likely, the next bar would be up. Okay. More than likely, the next bar would be down. And this is one that it didn't work. They went back to test the high there. Okay. It's the way the market works. All right. Any other questions? I do appreciate all of you joining me this morning. I love talking about trading. This is going to hit here probably. Well, thank you. I love support and resistance, and I love price bars. Okay. So now I believe it's next week. We're going to do one on webinars. I do one webinar for Nadex usually every Wednesday. And next week, we're going to be talking about trends. I had one on divergence. I believe it was last week. They do have the archive available. And let me bring it up to you. Let me erase all of my little drawings. I love to draw on my charts, as you can see. If you go to nadex.com and then go to the archive under Learning Center, if you filter by Traders Help Desk, then you will pull up all of the ones I have done. So using divergence as a leading indicator for trying to trading binary options was last week, and you can absolutely watch it. The other one that I was telling y'all about is pivoting into profits, pivoting into trading opportunities with binary options. Well, I've done a lot, so. And what, I really suggest also the planning and discipline, especially for new traders. This one and trading psychological issues, how to overcome them. They're both really good presentations. For beginners, do you recommend what strategy to use first? I really don't, Tom. The reason is all traders are different, okay? What I do suggest is that you learn price bars, because regardless of what type of strategy you decide to use, price bar is going to be critical. How do you use volume price analysis? Well, it's divergence within your volume indicator and with price. I think it's beyond the scope of this presentation today. I may schedule one in the future, but it is an advanced topic. So if you cannot see support and resistance, or you cannot read price bars, tackle that first and then take on an advanced concept like volume analysis. What is your opinion of watching the price levels with zeros with the big money trades? I find that when I decide to watch a certain level, like, okay, here's the double O's and they're always going to make a move here, it skews my perception. So I don't use that. And you don't want to use something that's skewing your perception, okay? Will they move it at the double O's? Well, they might. They might move it at the 05s or the 10s or the 15s or the 20s or the 50s, I like to let price dictate what the market's going to do. I mean, Sharon, I don't even look at news other than I know I have a news announcement, okay? But other than that, I typically try to read my charts. And I try to keep anything away that's going to skew my perception of what the market's going to do. Here's a good example, okay? How many of you have heard, oh my gosh, the markets are overbought. They're overbought. Don't buy into it. Sell it, sell it, sell it. But it's still going up. Now, if I'm skewed into thinking, oh my God, I can't buy the market, well, then I have to sell it. And then I'm going to be forcing trades all day long because somebody said the markets were overextended. And they are overextended, but you're going to have to buy until you can't, until they change, I don't like to skew my perception. Wyckoff always said the best thing that you can do is actually cut off the TV, don't read the newspaper, don't do any of that until after the market is closed. And in that way, you're actually trading what you're seeing on your chart, not what someone else is saying. And I'm a firm believer in that. Okay, any other questions? Well, I hope everyone has a wonderful day. Do watch out for tomorrow. We got major, major announcements tomorrow, including the UK election, the Euro rate announcement, and of course, Comey testifying before Congress. It's going to create a lot of volatility, so be careful trading tomorrow. All right, everybody have a wonderful day. And again, thank you for joining us this morning.